It's Talk with Angelo live. I hope everybody is doing well on this glorious Thursday, 7 p.m., depending on where you're at in the country. I hope everybody's doing well. Thank you so much for watching the show on the channel with Angelo Christian. Every Thursday, just kind of getting centered in here. Every Thursday, 7 p.m. Central, we do Talk with Angelo live. It's a talk show with Angelo Christian Financial, your direct nationwide commercial and residential lender. Really appreciate all you guys watching the show on the channel. It's a chance where we actually get to connect. I'm just kind of zooming in, making sure everybody can see me and hear me okay. So, let me just get a little bit, I think that's okay. Anyway, I really appreciate you guys watching us on the show. We work really, really hard to educate you, empower you, teach you about loans, teach you about finance. You guys can see me okay. So we've been doing this for 20 plus, there you go. So we've been doing this for like 20 plus years, nationwide commercial residential lending. We have our YouTube channel where we go to broadcast all of our loan programs, commercial, residential, hard money loans, portfolio loans, no documentation loans. Then we obviously have 4 videos that we shoot every single week. You know, we talk about all different types of things: commercial, residential, hard money, private loans, all different types of financing. And we come out with new different programs, and a lot of people, they reach out to us because they want to get more information on loan programs, trying to work on their credit, trying to work on their finances. And then every Thursday, 7 p.m. Central, hey, good evening, Mary France. I hope you're doing well. Thank you so much for watching the show and the channel with us. I think you were one of our lucky winners last week. So we also give away free Amazon gift cards. You know, it's an extra $100 to the lucky winner. And that's the people that, you know, they answer the questions correctly. They can actually win free prizes. We also do giveaways to our clients that we actually put in a raffle for free big screen TVs, refrigerators. You've seen it on our YouTube channel. So we want to let you know we are the real deal. We're not just a YouTuber, a marketing company, or a smoke screen. We're actually out there every single day, pounding the pavement, making loans, working our butt off, getting it done, to do whatever we can to help and service our customers. And we'll answer any questions that you guys have about loans or about funding products or whatever you're thinking about, or questions you want to ask me, whether you want to get a career in real estate or you're trying to find information on different loan programs. I have some topics I'm going to talk about tonight, but if you guys ever have questions, we're happy to answer those questions for you. Or whatever's on your mind. My expertise is in lending, in real estate university, teaching people, educating them on finance, educating them on loans, teaching them how to become a top producing loan officer. I've trained over 300 people to become a top producing loan officer. I'm very good at that skill set, at least that's what people tell me, I should say. I mean, I think I've been doing it for almost 20 years. And I know a lot about loan programs, and there's a lot of different loan programs. There's, commercial. Before I came on this show tonight, I was doing a Zoom podcast seminar for commercial multifamily loans, which is one of the topics I want to talk about tonight, is investing in commercial multifamily. A big thing that we are a part of is passive mailbox money, investing in multifamily, and that's a huge thing that I think is really a really important thing. So anyway, I appreciate all you guys coming on the show tonight. I'm doing good, Tony. How are you doing, buddy? Good to see you. Thank you so much. And the thing is that we just have a very open, casual forum here. So if you want to ask questions, you want to say stuff or whatever, you don't have to, be kind of walking on eggshells with me. I don't operate like that. So you guys, I'm very relaxed. So I know that, a lot of people are different on that type of topic, but I mean, I'm really cool, just relaxed guy. So any questions that you guys have, let me know. This is, we're coming into October. Tomorrow's October 1st. Kind of finishing up 2021 and getting ready to go into 2022 with a blast. And, it's going to be exciting, right? I'm excited. I'm optimistic for next year. I'm hoping that as an economy, as a global economy, we can somewhat emerge out of this COVID nightmare that we've been in, for going on 2 years now, and going into some type of excitement or hope for a better future for all of us. A stronger economy where we can go out and play with our kids, or if we want to go watch a movie with our wife or our spouse, or whatever, go to a club or go to a cruise, getting back to some level of normalcy. I hope that we're able to do that. And I know that everyone here also wants to do that as well. So anyway, a few things that and again, if you guys have any questions about loans, credit, real estate investing, feel free to chime in, ask me those questions. I'm happy to answer those for you. The things that I wanted to talk about tonight is, the first thing is self-employed loans. We are becoming one of the market leaders in self-employed home loans. Okay, this is a big, huge thing because a lot of lenders, I'm going to answer your question on interest rates. That's a great question. Evelyn, it's easier to get loans approved if you're buying the house you've been renting. Good question, Evelyn and Mary France, on interest rates and buying houses you're renting. I'm going to answer those questions for you. Buy a house while you're renting. I'm going to answer those questions. I'm just going to write that down. So, self-employed loans is a really, really big thing because a lot of self-employed people, they're not able to get approved for a loan because they write off everything on their taxes. So we specialize in self-employed loans. We have all different types of self-employed loans. We have 1099 self-employed loans. We have bank statement self-employed loans. We have no documentation self-employed loans. We have 1-year tax return self-employed loans. And that's just outside of the norm. The norm is 2 years of tax returns. But a lot of people, they don't qualify for a self-employed loan because they write everything off on those 2 years of tax returns. Like I was doing a loan this morning for somebody buying a $1.5 million property, and he's self-employed, makes great money, has great assets, but his tax return shows he makes $53,000 a year. So you're probably wondering, what business does he have? I'll answer that question about the manufacturer and USDA. I'll answer that question on USDA manufactured. So he was making $53,000 a year, but in his bank statements, he's depositing $500,000 a month in income on his bank account. That's what we're talking about right now, Cecilia, is self-employed no-doc loans. So the thing is that a lot of people, a lot of self-employed small business owners, they think they can't get a loan because they don't have the 2 years of tax returns, or they don't have the 20% down, and they give up. They get frustrated. They don't think they can get a loan. It's not true. We specialize in self-employed home loans without tax returns, and you can go up to a $3 million purchase price on a house, okay? Up to $3 million. You can find a great home up to $3 million all over the country, the United States, and find a great house, okay? And you can get very low interest rates, 3 to 4% fixed, no tax returns, no W-2s, no pay stubs. Hey, Pink Lady, what's the difference between a bank statement and what's the rest of the, what else is the question that you're asking? The difference between a bank statement and a what type of loan? So self-employed loans are hot. They're super hot right now. Okay, I'll answer the question on that, the difference between a no-doc and a bank statement loan. So it's a big, huge thing. It's a several billion, $100 billion, almost $1 trillion industry is the self-employed market. And we consider ourselves as one of the market leaders in those loan products, okay? We're very aggressive in making those loans. We want to help the self-employed. We realize that there's a huge need for that. And whereas a lot of lenders, they shy away from it, they don't want to deal with it. And we embrace that. We want to work with the self-employed. We want to help them to get them the funding, get them low interest rates, as least amount down as possible, and without having to disclose too much financial information. And those loans work really, really well. Self-employed people make great money. They're great borrowers. They repay their loans. So we want to be here to help you as your self-employed lender. Now, there are requirements so we can go deeper into the products. I just don't want to talk about all the good stuff. I need to make sure you guys understand how they work, okay? So usually these loan programs, they have a minimum of a 620 credit score. So you need to have at least a 620 credit score. And how I want you to think about self-employed loans is that the lower your credit score, the more equity you have to have in the deal. If you're at a 620 credit score, the maximum the lender is going to go up to is about an 80% loan to value. You're not getting zero down with a 620 credit score. All right, you're going to get, either 20% down on a purchase or on a refinance up to 80%. Now, the thing is, on the bank statement loan program, what they're doing is they're going off your deposits. How much are you depositing in your bank account every single month? So if you're depositing $10,000 a month, $10,000 a month, they're going to give you credit, usually up to 70% of those deposits. But if you can show both personal and business, then they're going to give you 100% credit for those deposits, okay? And you don't need tax returns, you don't need W-2s, you don't need pay stubs. They're going to just go off your deposits. Now, that works great for a lot of business owners. Now, some business owners, that does not work at all. I have a business owner, actually, today, where he has a lot of money. He has a lot of money in his bank account, but he can't show the bank statements. His income is just all over the place. He's a gambler, he's a business investor, all these different things, and his income it doesn't work for the bank statement program. He probably gets 1 or 2 deposits every quarter, big, huge deposit amounts, and the bank statement program doesn't really work for that, okay? So the thing is we had to do a no documentation loan. Pink Lady was asking the question, what's the difference between a no documentation loan and a bank statement loan? The no documentation loan, you don't show the bank statements, but you generally have to have like at least a 680 to 700 credit score, and you're going to put like 25% down, and then you don't have to go through all the issues to disclose all your bank statements to qualify for the loan, okay? So that's one of the big differences with a no documentation loan. You're able to purchase the house and not have to put the 12 months of bank statements, just put the bigger down payment. You do have to have a higher FICO score, but they don't dig through your bank statements for qualification. And that works very well. It's a self-employed loan. It's put into your business and you qualify through your business to get approved, okay? You do have to be self-employed for at least 2 years to qualify for that program. It's a minimum of $200,000 purchase price and up to $3 million. And that's a great program for people that are having issues using their bank statements to qualify. So very popular program. I'm a big advocate of either the no documentation or the self-employed bank statement loan program based on what you do with your career as a self-employed individual, okay? So anyway, and then we also have 1099 programs. Some of you guys are an owner-operator, or maybe you own your own trucking rig. You get 1099 by a bigger company, or you maybe own a hair salon. You get 1099 by a bigger company. We can use that 1099 to qualify you for your loan. So you don't need a tax return, you don't need W-2s, you don't need pay stubs, just the 1099 that you get at the end of the year, and we can use that to qualify you for a self-employed loan. So this is a very, very strong program, and you can, again, this program, you go down to a 620 credit score, interest rates start at 3%, and they go up from there on all these self-employed loan programs. I'm not saying you're going to get 3%, I'm saying they start there, they could be 4 or 5, 6%. The minimum down payment on a purchase is 10% down. The minimum loan amount is $200,000. No bankruptcy or foreclosure in the last 2 years. You have to have proof of rental history, so you have to show that you've been proving where you live for rent for the last 12 months. So there are some requirements. Would a no-docs work with income producing? Yes, you could no-doc. Yeah, you could do it exactly. And I'm going to talk about that. That's one of the things I'm going to talk about tonight, Cecilia, is investor no-doc loans. That's a very strong program that we offer, very strong. So I want to answer some questions by some of the viewers now. Some questions that we had in regards to manufactured with USDA buying the house that you rent and interest rate. My interest rate outlook, yes. The first question was on interest rates. I do believe that interest rates are going to go up. I don't know when they're going to go up, but I do believe that they will. Interest rates, I think, have been, somewhat artificially compressed for far too long. And as the economy gets stronger and stronger and stronger, I would suspect that interest rates are going to rise. You can't just keep rates as low as they are forever. Rates have to go back up at some point, and I do think they will. I really do believe. Now, I don't think they're going to skyrocket. I don't think that they're going to 8%, but I think you could see a 30-year fixed at 4% again. Yeah, why not? And I don't think there's anything really terribly wrong with that. I mean, of course I want low rates, but it's the way that the world works. It's the way the economy works. As the economy gets stronger and stronger to curb inflation, they have to raise rates, So yeah, I do expect that interest rates are going to go up on the horizon. I do believe that. So that's the first question. The next question is, does it make it easier if you're, and these are all questions by our viewers. Remember, you can always ask us questions down below. Is it easier to buy a house that you're renting? If you're trying to buy the house that you're renting, it just depends. It can be depending on the type of contract that you made. If, some of the rent is going towards the equity of the home or the ownership of the home. I don't know what type of contract that you made when you signed up for the property. If it's owner financing, if it's a lease purchase, if it's a contract for deed, all of these things are going to go into play. Just because you're renting the property that you want to buy doesn't automatically make it easier. You still have to qualify for the loan. So now the fact that you have rental history does help you, but there isn't any special exemptions because you're buying that property. And yes, you can buy down points on a bank statement loan. Yes, 2 points will move the interest rate 0.25%. 2 points will move the interest rate 0.25%. So I hope that helps answer your question. So the thing that what I was going back to earlier is, so it doesn't make it, just because you're renting doesn't mean it makes it easier for you to purchase that home. You still have to qualify. Unless you have something in the contract that says that $50 a month is going towards the ownership of the house, you're still going to have to go through a qualification process. Okay, that's good, Evelyn. Yeah, that's fine. No, I mean, I'm just, and that's good if we've already qualified you. I'm just saying that, explaining how it works. So yeah, that's good that we got you approved and everything. And it's going to help you. That it looks good that you pay rent, of course. You're welcome, Evelyn. Manufactured home in USDA. Okay, USDA is good for single-family homes, modular homes. Modular is considered single family. So when you buy and you get in USDA, you can do it for single family or modular. Manufactured is different though. Manufactured is a mobile home. Hi Shirley, hope you're doing well, good to see you. So manufactured is a mobile home. And for USDA, the only thing that's eligible on a manufactured mobile home is a brand new manufactured mobile home. USDA does not loan on pre-existing manufactured mobile homes. So if you're trying to do the USDA loan, you can only do it on brand new, non-titled manufactured mobile homes. Now that doesn't apply for modular, and it certainly doesn't apply for single family. USDA is not for multifamily, okay? and it's very hard to get one done on a duplex. It can potentially be done, but I generally is only really good for single family. Okay, so I hope that helps answer those questions from the viewers. Now let me go into this investor no doc loan. Someone was asking questions about investor loans and no documentation, which is a very big product for us, and how we help a ton of our investor clients. We help so many of our investor clients to do no documentation loans. There is an equity line. For equity line of credit, Pink Lady, you would have to not on a no documentation loan. There's not a line of credit. You'd have to show tax returns for the last 2 years to get the equity line of credit. They haven't come out with an equity line of credit for bank statement non-QM loans yet. Okay, now that could happen in the future. This industry changes all the time, and that's subject to change, and it could change. But anyway, going back to the investor loans, if you're an investor out there and you're trying to build up your portfolio, I was helping an investor today to buy 5 properties at the same time, and you want to build your portfolio, we have investor no income verification loans, whether they're purchase, refinance, cash out, single family, multifamily. We can hook you up. We can give you great rates starting at 4% on investor no documentation loans. We got you covered. We can lend nationwide. I don't care if you're in Hawaii, California, Texas, Maryland, whatever, Florida. We have no documentation. You don't have to verify income. You don't have to, sometimes you don't even have to verify assets. We can do purchases, refinances. We can put in your business name. We can put in your LLC. You can get great rates, 30-year fixed loans. I mean, awesome programs, guys, awesome. So we want to be able to hook you up to get you the funding. If you're an investor, you don't need to have tax returns. You don't have to have the W-2s. On the loan application, you leave all your income blank. You leave your employment blank. You don't fill out any of that information on your employment or your income. It's an awesome program, guys. I mean, I can't tell you, I've helped so many investors. I'm so happy to offer investor no documentation loans because, you know, banks, they have, you know, a lot of banks don't like to make loans to investors because they think that they're not going to manage the property the right way and go into default. And we just look at it differently. You know, we help our investor clients. We're very pro-investor to work with, you know, LLCs, corporations, trust, you know, investment groups, funds, insurance companies, to help all of you guys out there to get you great loans, low interest rates, fast closings, excellent service, and, you know, less hassle, right? You don't need all that hassle to be able to get a loan. And I believe that. Now, there are some loans that do require a lot of documentation, and we can't, you know, take any shortcuts on that, but these investor loans are really, really good. They're easy to approve, easy to close. So if you're an investor out there trying to build your portfolio, we really want to help you to get it going. That's why we're here. That's what we do. So I would love to hear from any of you investors out there. One of the questions was asked earlier from one of the people, one of the viewers, and they're asking, can you do an investor no documentation loan? Absolutely. That's what we specialize in. Those are the easiest loans to get. And you can do them for purchases, refinance, investor fix and flip. If you want to buy a property. Oh, thank you. Oh, my hand gestures? Oh, thank you, man. Appreciate that. Thank you. So, so we can do all those different type of loans. We can do all those different type of loans. If you're an investor, you want to do fix and flip. I had a viewing or a seminar earlier with an investment group out of El Paso, Texas, and that was their whole thing. They want to buy investment, commercial multifamily and single family fix and flip, where they buy distressed properties. We'll give them a line of credit to fix the properties and then flip them. So they'll be able to get the money to purchase the multifamily, purchase the single family, get the cash back for the rehab, and then fix it up and then sell it. And yeah, I mean, it's a great program, guys. Investor programs are really, really awesome because, you know, a lot of people have become very wealthy and very successful buying distressed assets assets that need rehab, that need repair, that are not ready to go to market, and fix them up and sell them for a profit. Like he was looking at a $500,000 multifamily apartment complex and needed $100,000 in rehab. He's going to put 10% down and get 90% back for the rehab. So the property is $500,000. He's going to put $50,000 down. The property needs $100,000 in rehab. We're going to give him 90% for the rehab. So we're going to give him $90,000 for the rehab. He only needs to put $10,000 up. The ARV, the after repair value, is like $980,000. So $980,000 is what it's worth. He's only having to put in how much? $500,000 plus the $100,000 is $600,000. So he has a potential profit of $380,000 minus realtor commissions. We do have beginner programs, yeah, absolutely, yeah. So we work with the very beginner investor or the very seasoned big investor. We could do, we can help either one. If you email me, we can send you over information on our investor programs. Depending on, obviously we have to understand what you're trying to do, but we can definitely help you, put you in the right direction. Whether you're a first-time entry-level investor, you're trying to get help, or you're very seasoned and you're trying to just add on to your portfolio. We do all different types of loans, and that's one of the things that I want to talk about tonight was commercial multifamily. If you're ever trying to get into commercial multifamily, we work directly with Fannie Mae and Freddie Mac on commercial multifamily. And that's a great opportunity to get great interest rates, very low, starting to at 2.5% on interest only for agency financing for multifamily. Very, very good loans, low interest rates, and really the ideal way to go if you're trying to build a portfolio with commercial multifamily. So I don't know how many people are watching this or that are doing commercial multifamily, but it's a great way on how to build passive income to build your portfolio. If you bought, a 200 unit apartment complex, and let's just say it was $10 million, and you made, let's just say off of that, you made 10% a year, that's usually enough income for most people to live off for the rest of their life. That'd be, $1 million a year, which is great for a lot of people, and there's deals out there like that. A lot of deals out there like that, where they make anywhere from 6 to 10% a year of giant multifamily apartment complexes, and they live off of that passive income, making big money. There's people out there that have one of my biggest customers has 4,000 apartment units. He's a very extremely wealthy gentleman. And so, it just depends on what you're trying to do. You got to start somewhere. He didn't start like that. He started with nothing and built up his portfolio, his empire. So anybody can do it. And it's good because, you want to have multiple flows of income. You have the income from your job, you're doing your job and everything. But if you can create an alternate passive income and make extra money, that's really, really good, because then you can have more revenue coming in, so you can do more things with your life. You can go on that vacation, you can buy that car, you can take that trip, you can buy that shirt, you can buy that watch, you can help your family, you can help your loved ones when you have extra income when you're able to do that. So that's a really powerful thing. And real estate allows you to do that because everybody needs a place to live, right? People will rent all over, especially depending on the city that you're in. So commercial multifamily is a huge thing. So anyway, what else? So there are some requirements for commercial multifamily, and the biggest thing that I would like to say, that's a great question, Angelo. So the way that it works is that it depends on to the level of the credit repair what it is. So if you need a credit boost, or it's like a couple things on your credit and we're doing the loan for you, yeah, we can help you with, if it's no more limited to 3 items, on your credit. They're very basic things, okay? However, if you need major credit repair and you have 10 things going on in your credit, 5 to 10 things on your credit, and we got to get that stuff off. That's not our specialty, that's not our forte. So we'll recommend we refer you out to Fortress or one of our credit leaders to help you to clean up your credit, because you need to have an expert get in there and fix that stuff. Okay, so it just depends on what's going on. All right, so with the credit, like before I came on the show, I was helping somebody with their credit. They just needed a few things, and my loan officer was able to take care of them. However, at the same time today, someone that reached out and needed 9 things fixed on their credit, we're not able to do that. We had to send them the credit repair. So it just depends, Angelo, what it is. It's a good question though. So, all right, so we talked about Hey Angelo, you mentioned in one of your videos the client guarantee. I'm sorry, I missed that question on USDA. Could you repost that, please? I saw your question. I saw something about USDA and my client. So if you could repost that question, I missed some of it because I was answering somebody else's question. If you could just repost that, please, and I will answer it for you. I mean, I do my best to answer everybody's question. So Nevada, NV guys. So. Yeah, let me know what your question was, and I'll be sure to answer it. And then, the other thing I want to talk about, we talked about the commercial multifamily, and there's 2 different levels of commercial multifamily. You have commercial level, you have bank loans, and then you have Fannie Mae agency loans. So there's 2 different types of multifamily that are very popular. Usually, if you're buying below $1 million, you're going to go to a bank. To get a loan, you put 20-25% down. And the requirements are different for a bank loan than they are an agency Fannie Mae loan. Fannie Mae is really going to be designed for $1 million plus. And usually for investors that have already been through the process or own some REO, some properties, have some experience that can get, they're not entry level. Entry level is not for Fannie Mae. You could probably start with a bank doing entry-level multifamily. You will have to put 20-25% down. They're not so much concerned where that money comes from. You can raise it from a syndication, from investors, from wherever. It doesn't really matter, as long as you have the funds from some way to put those funds into the down payment into the property. The other thing is that they look at, you mentioned you help the client build. It depends. That's a good question. So the thing that with the USDA, there's no loan limit, or there's no loan limit with the USDA. Okay, but there's a debt to income ratio limit. With 96,000 of income, you could, in theory, go to a $500,000 to $600,000 home, in theory, okay? But there's other things that are involved. Like, what are your other debts? What's your credit score? What region of the country are you in? Because 600,000 in LA, well, you couldn't even do USD in LA, but let's just say 600,000 in California versus 600,000 in Louisiana is going to be a big difference, okay? So it just depends, right? And your FICO score, your other debt ratio, stuff like that. What's on your credit? How many trade lines? How strong is your credit? Do you have an 800 credit score, or is it 600? So there's just other factors that are involved. It can be done. It just depends on your file. And I'd have to go deeper into it. But see, that's the thing about loans too, guys, is that there's a deep review of loans, and you have to understand how they work. All right? There's a very deep review, and you just can't say from the surface, oh, it's going to be like this, and it's going to be okay. And you can just get approved. It doesn't work like that, because there's other variables that are involved. So I hope that helps answer your question. I would say, just in theory, 90,000 income, yeah, you could do 500,000 to 600,000. I got to look at it, and then I can tell you for sure. Okay, so okay, what other question? I think someone else asked me something I missed. I have zero debt. I live in upstate New York. Credit, okay. Um, you know, the thing about New York, the property taxes are very expensive in New York. So I gotta see what part of New York, what the tax rate is, and then I can advise you. I'm gonna say that you're gonna be anywhere from 400 to 600,000. Okay, and the reason why I don't know what the tax rate is right now. The other thing with USDA is that they're very strict on your house payment ratio, your housing ratio. They don't like that to go over 31% with a 765 FICO. So, you know, you might be able to get 500,000 or so. I have to look at it and then I can tell you. So, yes, of course. Yeah, we can definitely help him. If we just have him, give me his number or have him call me either way. I mean, you know how to get a hold of us, 832-431-6331. So have him call us or give me his number, we'll call him. We'd love to help. That's why we're here. You know, that's why we're here, guys. I mean, to figure out how to help solve people's problems with loans, get funding. You know, sometimes they take time to work on to figure out. So, yeah, multifamily, going back to that, with Fannie Mae, $1 million plus. I heard front end DTI caps out. It's all subject to GUS. So USDA uses a system called GUS, and they just put it in there, and the GUS tells them. So it could be 33. It could. But it could be 31 too. You know, so it's definitely not going to be like I live in Vienna, I'm working on my credit, I never owned a house. Ideally score needs to be 620 plus to buy a house. 620 plus. 620 middle score plus. The higher the better. So yes, what do I need to earn to afford a $1.5 million house? Ooh, that's a good question. You'd have to be making for $1.5 million, you know, probably I would say at least, I would say at least 250K, somewhere in there. Maybe 20,000 minimum, I think is a good number. You know, something like that. If you're making 200,000, I need help with my son getting out of the military. He wants to win Oklahoma to Texas. Yes, call us. We're specialized. A budget $1.5 million. You know, I think 200,000 a year income would work. Thanks. You're welcome. I'll give you a call. Thank you, sir. Please have him give me a call. Yeah. Yeah, we specialize in USDA. We specialize in jumbo. Talking about jumbo loans, that's one of the things I wanted to talk about too. But yeah, going back to the commercial multifamily, you know, if you guys are investors, you're doing commercial multifamily and you want to get into investments, that's one of the things that we really, he wants to relocate? Okay. Yeah, we can definitely help with that. We lend in Oklahoma, we lend in Texas, no problem. Reach out to us. We want to be here. We want to be your go-to, your hub for lending. You know, so we do all kinds of loans: VA, FHA, USDA, investor lines of credit, no-doc, bank statement, hard money. You know, please reach out to us. That's why we're here to help you. Hey, Ryan. Oh, appreciate that. Oh, awesome. Thank you for watching the show on the channel. Yeah, we've been working really hard to educate people, empower them about loans, finance. I've been doing lending for 20 years. Started off as an LO. And now, you know, built a mortgage company that I own and operate. And so you got to start somewhere, man. Yeah, I started just working on helping people, you know, getting loans, just refinancing and purchases. And, you know, it's a great industry. It's very rewarding. You help a lot of people. How long does it take to receive your pre-approval letter? It depends. It can be as fast as 30 seconds to as long as a few weeks. It just depends on the file. In Oklahoma, want to get licensed in Texas. Okay, cool. Yeah, Oklahoma's a great state. I love Oklahoma. I love Tulsa. I love Oklahoma City. I love the people over there are very nice. I love the casinos there. You got Choctaw, you got Windstar. So great place, great people. So, and we're sister states too. So we're here in Texas. So anyway, multifamily is a big deal. It's a huge business. You can make a lot of money, mailbox money. I have a lot of clients. They try to create passive income. They focus on their career. They make a lot of money with their career, and then they buy real estate multifamily investments from the money that they make. You know, like take a look at LeBron James, take a look at Jay-Z. Take a look at The Rock. They made a very good career, and it could be anybody. It doesn't have to be them. It could be you and your career. It could be you. Be as an LO. Ryan, you as an LO. Angela, you in hospitality. And you make a career. What you're doing, you make money, and then from that extra money that you have, you can invest that into multifamily, and you can make very good money. A lot of people end up making more money on their passive income on multifamily than they do on their primary job. Okay, and so that's a very good strategy, and there's always multifamily that's available for investing, and you can make really good returns, and it's a very low risk because people are always going to want to stay in an apartment complex. Oh, you're an LO? Yeah, I knew you were an LO, Mary France. Yeah, you're in Florida though, right? Yeah, Florida's a really good state too. Florida's our second highest volume state. Texas is our first state, and then Florida is our second highest volume state for lending. So, anyway, that's on multifamily. Now going into jumbo loans, one of the things I want to talk about is jumbo. We have some awesome killer jumbo products, guys. We're one of the only lenders in the United States that will do a jumbo loan up to $850,000 with only 5% down and no PMI. We do have, yes, just email us. Yes, I'll let you know when I come there, and you can meet with us there, Mary. I'll definitely love to meet with you there. I'll message you and let you know when I come. Yeah, Ryan, we do have a LO training system. Just message us and we can hook you up. Just email us at angelo@chihomeloans.com and we can get you the information on our real estate university. But jumbo loans is a hot product, guys. Home prices are rising, and the thing that's really cool, we have a jumbo loan with only 5% down, no PMI, up to $850,000, single family home, awesome low interest rates. Interest rates starting at 3%, 30-year fixed. Great program, comes with a line of credit up to $250,000. You can use that line of credit as a revolving credit line for future purchases, and you only need 5% down. There is no other deal better in America than this loan program. 5% down, no PMI, comes with a line of credit, low interest rate, down to a 660 credit score. It's amazing. Now, the only states we can't do this in is Texas, and Alaska, and Hawaii, and Maryland. But any other state, we can offer this program. Phenomenal program, amazing, unbelievable. And I've never seen any other lender touch this. Okay. Now, if you want to go over 850, realtor, I'll answer that question. If you want to go to 850, we can go up to 2.2 million. $2.2 million. Have you ever heard of Link Trio? I noticed Texas offers it, but I know. What's Link Trio? What's Link Trio, Ryan? I haven't heard of that. That's interesting. I have not heard of that. So we go up to 2.2 million with only 10% down, and you don't need any PMI. So if you want to go more than 850, you go up to 2.2. You only need 10% down. It's just awesome deal. Most lenders at that price want 20, 30% down. We can get you done with just 10% down, and get your interest rate starting at 3.5% fixed. Oh, DPA. I have not. I would love if you could send me the information on it. You know, if you want to email me the information, I'd love to take a look at it. I have not seen that one. I've seen a lot of DPA products, like Seth, T-Shack, Shinoa. Next year, we're rolling out our own DPA internal program. Oh, your company's pushing hard. Yeah, there's a lot of companies that are pushing DPA. programs. You know, the ones I've seen that are big are Chenoa, Seth, T-Shack, my community. There's, you know, obviously through county, local government jurisdictions where you can get down payment assistance or grants. You can get free grants to be able to buy a house up to $20,000. There's a lot of stuff out there like that. You know, so yeah, I mean, I'd love for you to send me the information on that. So anyway, yeah, for jumbo loans, guys, it's a hot program. You can go up to 2.2 million with only 10% down. And down to, we go down to a 6, with 10% down, you have to have a 700 credit score. Interest rates are starting at 4%, no PMI. You can use bank statements or tax returns or W-2s to get approved. Awesome program. We offer that like in 45 states. So on purchases or refinance, really, really strong program, guys. So please reach out to us if we can help you. If you know anyone needs a jumbo loan, we'd love to give you the hookup on a jumbo loan. That's why we're here. You know, we have a lot of great customers that we've helped, thousands of clients with jumbo loans. So we definitely love to help you out. If you know anybody that needs a jumbo loan, please call or text us at 832-431-6331. We have all different types of programs that we offer. I mean, those are the main things that I kind of wanted to hit on tonight. We talked about self-employed, the self-employed products that we offer. We talked about the investor no-doc loan. We talked about the commercial multifamily. We talked about the jumbo loans. So we hit on, you know, 4 of the big topics that I wanted to talk about. We talked about our interest rate prediction for next year, what we think is going to happen. So these are big things that I see happening right now in America. So I really appreciate you guys always coming on the show, the channel to learn. Remember, feed your mind, educate yourself. You want to empower yourself as much as you can. Knowledge, if it's used correctly, you can monetize and make money. So that's what we're here to do, is to educate you, empower you, and be your lender. We want to be your lender, your go-to for funding. So you can always reach out to us. We're open 7 days a week. What lender is open 7 days a week? I don't know any lender that's open 7 days a week that offers nationwide commercial and residential lending. I've never heard of it. Most lenders close at 5. They only either do residential or they only do commercial. They don't offer both. We want to be your hub for financing. So please call or text us at the number above, the 832-431-6331, or you can be proactive. In the link down below, you can click there to get signed up, to get pre-approved with us. We want to be here for you. So thank you guys so much. Let me get you this money on this Amazon gift card. So I'm going to add, the way this works, if you're new to the show, I ask a question, and whoever answers the question first correctly and accurately, how much can I get in Michigan with 70K income and 800 score? Probably, Pink Lady, I would say in Michigan, 400,000, around a $400,000 home, somewhere around there, 400, 450. It just depends how much you're putting down, what your debt ratio looks like. Somewhere around there is what you can qualify for. I'm not saying you have to spend 400 or 450. You could spend 300. But somewhere in that range. Oh, thank you, Angelo. I appreciate that, man. Thank you. So, so let me go back to this. So the question is for the free $100 Amazon gift card. Whoever answers it first is going to win the prize. So for our investor no documentation loan, the loan I talked about earlier on the show, what credit score do we go down to? So whoever answers that first is going to win the gift card. So what credit score do we go down to for our investor no doc? 620, you got it. 620, Marie got it first. Good job. All right, Marie, you're the $100 gift card winner. So I appreciate you for answering that again correctly. Marie, you won last week. You won again this week. So text us your email, Marie, to the 832-431-6331, your laser lightning speed on the keypad to win that money, girl. Proud of you. Proud of you, girl. So text us at the 832-431-6331. Get us your email. We'll get you that gift card as soon as possible. Thank you guys so much for watching the show and the channel. We love you. Take care. Be strong. We'll see you guys next Thursday at 7 p.m. Central. Talk with Angelo. Take care and peace out. Bye-bye.